just want to welcome everybody to our Gear Up seminar, webinar, however you want to call it. We're grateful that you're willing to spend just a few minutes with us to go over some things. Our hope is that this is a valuable use of your time for the next 25 minutes. Our goal is to keep these to a total of 30 minutes. Our goal is to be off by 11:30. But if there are issues or any way that we could get this better, please reach out to us, send an email. We want this to be useful for you and hopefully beneficial to us from an audit standpoint as well. So welcome. We're going to try and get better each week in terms of what we deliver and the functionality of it, and hopefully it'll be a value to y'all in terms of what you're looking for. So today we're going to kick off our Gear Up meeting. I just want to kind of go over the goals of what we're trying to do, and then we're going to jump into what we're doing. So we wanted this stems from a conversation that we had internally as a team in terms of what could we do better to help our clients prepare for the upcoming busy season. And the thought is that if we could start now in November and just have a short meeting on a very specific topic and give you one or two tasks that you can get done that week. The idea being that if you implement all of those each week, that by the end of the year, you're in a better position to have your audit done and moving quicker, and most importantly, in a smooth way. So, if there's something as you see this that is a topic that we need to cover, or something that you've got concerns, or in any way that we can better meet that goal, please contact us. So we do find at the end of the year, and especially at the beginning of the year, when people start thinking about their audits, that they have some questions and stuff like that, and we start answering the same questions. So we tried to pick the topics based on what we think are a lot of the common questions that we're going to get asked over the next couple months. And then lastly, we want to provide a forum for clients to ask us questions in terms of what they need to be doing to gear up for this season. I just want to say thank you for trusting us as your audit firm and to meet your audit needs. I'm so grateful to be in this industry and grateful for the clients that we have. So the schedule going forward for the next 2 months is outlined before. Today, the 7th, obviously, we're going to be talking about the new lease standard. And then we're going to have a variety of topics, financial and compliance related. So some will be me, some will be Ben, some will be some of our other finance teams in terms of going through. But this is kind of the schedule of the key topics that we felt like would be valuable in terms of preparing people for their audit for next year. So let's talk about the lease standard. The old way, okay, so on the left here, the old way of doing the leases, this is pre ASC 842. Leases were separated into two types. There was a capital lease and there was an operating lease. Capital leases were defined by basically if you had like a dollar buyout, or basically the lease payments equaled the value of the asset, and you were going to keep that asset. Even though it may be termed a lease, you would still essentially be purchasing it. Operating lease would be something like renting a building and stuff like that, where you're not going to take over the asset at the end of the period. Your capital leases were treated as a purchase. Basically, it was just a fancy note. And your operating leases were treated as expenses. And so in the footnotes, all that wording behind all the financial statements is where you would see disclosures about the lease, the length, the future payments and stuff like that. The new lease standard, basically, it has the same separation into terms of capital and operating. They renamed capital to finance lease, but it's treated the same way as the old capital leases were. The biggest difference is with the operating leases. So instead of having it sit in your footnotes about future payments and stuff like that, there's a couple of accounts that have been created, a right to use asset and a right to use liability. And the total amount of the payments that you are going to make over the life of the lease is going to be put onto your books as an asset and a liability. They should match each other and they'll decrease in the same fashion. But it can be a significant number that gets put on as a liability and as an asset. So your payments are still treated as an expense, and it goes through along those lines. But the biggest difference is that liability and asset will decrease over the period of your lease. So let's say that your lease is $10,000 a month, $120,000 a year for 5 years. Instead of just recording that $10,000 a month as an expense, you now have the full amount of the total payments put on your account as a liability and as an asset. And then at the end of the first year, those would be reduced down for the $120,000 of payments that you've made. So it is a little bit trickier. There's a whole bunch of curveballs that get put into this when you start talking about pre and post implementation and stuff like that, as well as just in terms of, new accounting that's going to be required for it. So we wanted to go over some spreadsheets that we've created to help you with those. And I'm going to turn the time over to Candy and let her share her screen and let her kind of go over the different types and which spreadsheet would get used at each time. So Candy, I'll let you take over.
Okay, so hello everyone, I'm Candy. So before we start that, we want to show you what spreadsheet we are going to go over today. So as on the screen, you will see that the first two is finance lease. And then we have the after January the 1st, 2022, and then the other one before. So, so one is after the implementation of the new lease standard, and one is you sign it before the implementation of the new lease standard. And then again, the same thing for the operating lease. You will see that we have the fixed payment after January the 1st, 2022, and then another one before January the 1st, 2022. And here you will see another two operating lease, but it's irregular payment. These two are irregular payment. So for the operating lease, we separate it based on fixed payment and then irregular payment, and then each one before the implementation day and after the implementation day. And then we also have created a spreadsheet for you to summarize all your lease so that it will help you to identify. And in that case, it won't be easy to miss out anyone. Yeah, because based on for this new standard, you are required to identify all your lease. Even if a piece of equipment, you are required to apply this new lease standard and then record it. And then the last spreadsheet we are going to go over is the new. We created a new spreadsheet to show you a few new accounts you need to set up in your books just to align with the ASC 842. So now we are going to go over this spreadsheet one by one, and I'm going to share my screen. Can everyone see my screen? Okay, so let's start with the finance lease after January the 1st, 2022. Okay, so on this spreadsheet, when you open it, you will see a bunch of highlight in yellow area for this session. So when you see this, the first thing you need to update is the lease property. And then this section is lease details. So basically, you can find the information from your lease agreement. So get the information from your lease agreement and then update this highlight in yellow area. And here you will see that we have a reconciliation here for these few items. Just read, and then if it's not applicable to you, then just leave it like this. You are not necessary to fill out anything here. Just based on your agreement. If you have it, input. If you don't have, then ignore it. But for this session, this detail you need to fill out based on your lease agreement. So this spreadsheet is our example. And then once you update the highlight in yellow, you will see that at the bottom here, this table, you calculate the numbers for you. And then we also, in the box, this big box, these are the proposed journal entry you are going to record in your books. So because this one is after January the 1st, 2022. So if you have any lease, if you sign any lease after this date, then you will use this spreadsheet. And then after you have this number, you are going to click the proposed journal entry here, click the number and make sure it was linked to the correct spot. And one thing I want to mention is, if you see here, this one is journal entry to make at December 31st, 2022. And then if you click the number here, this one, just make sure, because our goal is to record the journal entry at December 31st, 2022. So just click the number and see if it match, if it was linked to the correct spot. Because our spreadsheet, this one, we assume the commencement date is January 2022. But if it, like for example, you change it to March the 1st, 2022, then when you click this number, it will link to February 2023 instead of December 2022. Then before you make a journal entry to your QuickBooks, just always click the number and make sure it was linked to the correct spot. Okay, so this is the first one, the finance list after January the 1st, 2022. Now we are going to see the next one before. So the next one we are going to see everything is identical to the one we just looked, except this area. Because this one, it was carried over from the old standard to the new standard. So it might require you to make an adjustment, a transition adjustment. And this adjustment, it will go to your equity account. So later we are going to go over what account you need to create in your QuickBooks. So this one is the only difference compared to the first one we just looked. And same thing, just update this highlighting area, and then it's going to do the calculation for you. Okay, and the next two we are going to look is the operating lease. Let's see this one, fixed payment after January 1st, 2022. So fixed payment, it means after you sign the lease agreement, you are going to make the rent payment with the same amount every month during the whole term of your lease. So again, we highlight some area that you need to update, highlight in yellow. And then once you update this based on your agreement, our spreadsheet at the bottom here is going to calculate the answers for you. Just remember, don't change the highlight in gray area, because these are all, we use formula. And then this, for all the spreadsheet we go over, we just assume the lease term is 10 years. So if you have at least more than 10 years, then we might need to add some rows for you. And if your lease is shorter than 10 years, you will see some blank at the bottom here. That don't worry about it. It will not affect your calculation. As long as the information you update, you input here is accurate, then you should be fine. And again, here is some proposed journal entry for you to recall. Just again, make sure, click the number and make sure it was linked to the correct period, because it say at this day, then you need to make sure the period it match what you say. Otherwise, the journal entry you are going to post will be accurate. Okay, this is the third one. And then let's see the next one is before implementation. So again, the difference between this one and the other one is the first journal entry here. Because like what we say, it come from the old standard. So it might require you to make a journal entry to record the difference to equity account at the transition point. Okay. And then update the highlight in yellow area. Again, this session. Review your lease agreement, see if it's applicable to you. If it's not applicable, you can just delete it, remove it. And the calculation at the bottom, it will do it for you. This one is pretty simple. Okay, and now let's go to the next one, irregular payment. So I see that for some of the schools, they have, when they sign the agreement, they say that lease will increase like 3% every year or 5% every year, or they receive some lease incentive at the beginning, like reduce lease rent during the first couple months. So if that is the case, then you need to use the irregular payment. So let's take a look at this one. Okay, this one, again, update the highlight in yellow place. And then the difference, you will need to manually update the lease payment per agreement. So this session, you need to manually update. So you are based on your anticipating future lease payment. You will manually update this column. And then after you make the update, it's going to tell you what journal entry you need to put in this area. Yeah, and again, check the number, click the number and see if it was linked to the correct period. Okay, and also here, balance sheet. So after you finish this spreadsheet, you can click this number and make sure that it's a balance sheet number at December 31st, 2022. So click this number and make sure it was linked to December. It's just help you to self-check if everything was recorded properly. Okay, so this one is pretty simple as well. Now we are going to see the most complicated one, irregular payment before January the 1st, 2022. Let's take a look. So this one, you will see at the bottom here, we have deferred rent. So under the old lease standard, if you have irregular payment during the lease term, you need to straight line the rent expense during the whole lease term and then calculate deferred rent. That is under the old lease standard. So to implement the new lease standard, we need to calculate deferred rent first. That is our first step. And here it tells you a few steps how to convert transition from the old one to the new one. And then let's see step by step. Step 1, determine the total lease payment under GAAP. That is based on the old one. So you're going to list out all the lease information based on your lease agreement. So you need to update all these highlight area, and you will see that the non-highlight are all formulated. So just update the highlight in yellow area. And here you will see a lease incentive. We put a number there. That is just an example. So if you have something, you update the number here. If you don't have, you can just delete it. And then it will calculate it for you. And step 2, prepare the straight line amortization schedule under the old lease, the old way. So here, unfortunately, you will need to manually enter the numbers on this area too. So this area will be based on the information above. So if you, on step 1, if you enter the information correctly, you can, everything, all the information on step 1 will go to step 2, but you just need to manually update it. And then one key number we are going to get is this number, 2021, and then deferred rent balance. So if everything is calculated correctly, this number should match the different amount on your prior year audit report. So our purpose is to get this number and then match prior year audit report so that we can do a journal entry to remove this amount from your books when you change it to the new lease standard. Okay, and then step 3, different calculation by month. We need to do it by month. So again, this area, you need cash payment by month. You need to manually enter it. And this number, it comes from step 1. So if you see step 1, it tells you what period you need to pay how much. And then you get the information and then manually enter it to the bottom here. And then it will tell you, look, it will tell you at the bottom, if you see the end of the lease term is 0, then this should be accurate. And then once you update this spreadsheet, you are going to go to the next one, operating lease different. This one, you just need to update 2 areas, the interest rate and the lease property, and then everything else, look, everything else in gray, because this number all carry over from the different tab. So it's very important that you update this spreadsheet accurate. Otherwise, if everything is accurate in this spreadsheet, if the different calculation is going to be very easy. And then you see here, proposed journal entry. The very important one is the first one. You see, we are going to record right of use asset, and with debit different means we are going to remove it from your balance sheet you have last year. And then if you have any incentive, you also need to remove it, and then record the right of use liability. And then the next 2, these are kind of like the same thing we did on the other few spreadsheets. Just make sure, click the number, make sure it was linked to the correct period. And that's it for the spreadsheet. And now that's going to take a look at the lease asset arrangement. This one, everybody should have received this one. Like when we send out our mid-year composite score calculation, we attach this one, so you should have it. So this one is to help you to list out all your, to identify all your leads on this spreadsheet. And then here it tells you the type of lease, and you have operating or financing. So if you finish this one, it will help you to know what you have, what lease you have. Yeah, so it's a summary. And then if you have any question, you can click here and then it will take you there. And again, this one, embedded, if you have any question, you are not sure if you have any embedded lease or not, you can click it. And I put something that I know here. So it's kind of like a reference for you. Okay, so we would encourage everyone to finish this spreadsheet before you use any one of this finance lease or operating lease spreadsheet. Yeah. And the last one we are going to look is new accounts to set up in your books. So to align with the new standard, we need to create a few accounts. If you see here on this column, these are all the accounts you need to create in your books. And then on this column, I tell you where it should be, like under the balance sheet or the income statement, and where under the balance sheet. Like this one, you see. We just, on the spreadsheet that we just went over, we see that there's an adjustment. There might be an adjustment to equity at transition point. So that is why we need to create all of this so that you have a place to recall these accounts. I think that's all I have. And if you have any question, don't just feel free to reach out to us. And now I'm going to turn it over to Jerry.
Thank you, Candy. That was an awesome job. Let me just, one question that was asked. Do the before January 1st, 2022 payments include payments made from the start of the lease?
The before, you mean the before? Let's see here. Do you mean the prepayment?
Let's see, do the before 120 include payments from, I think that actually the answer is yes. It should include, I'm looking at it. If we didn't answer that correctly, or I shouldn't say correctly, if we didn't answer that in terms of the question, maybe shoot us an email with a little bit more detail so we can answer that question, or make sure that we're answering the right question instead of what we didn't hear.
Okay.
Real quick, just for those that are looking at these before I pull it back over, one of the things to notice on the spreadsheet, again, anything that's yellow is designed for input. If you have any questions on what's supposed to go in that comment, please shoot us an email and stuff like that. Anything that's gray is designed to be a calculation. Our hope was to keep this simple enough and give you a tool to calculate. One thing that I would point out is on the categories that you see down there, for example, in column H, you see a total lease expense, and we've gone ahead and identified that as it should show up on the income statement. The right of use should be a balance sheet, so you can kind of see where those numbers should be on your financials as another check. So I want to take over. Okay, so I did have one other question, was what is the effect currently on a month-to-month rent? Currently, the way that it works is that you're supposed to project that out in terms of what is a typical lease amount. So if most people in your area are signing 5-year leases, then you would need to project that month to month out to a 5-year or a 3-year. So, if you have a month to month, please contact us. Let's go over the things that you need to consider to figure out exactly how to calculate that. There are some issues in terms of related party. If you're a related party month to month or related party and you're not using typical market amounts and stuff like that, that would also potentially play into those numbers maybe getting a little changed versus the agreement that you have. So Candy, I'm going to take over the screen share. All right, so just a couple closing thoughts and stuff like that. Candy, awesome job on going over this. Please, if you have any questions as it relates to this coming out, in terms of specifics to your situation and stuff like that, let us know. We want to help you to understand this calculation. As you can see, it is a significant accounting, lots of just terrible spreadsheet numbers and stuff like that. Those types of things, we want to make sure that we're giving you enough education and stuff like that. Last question we had was car leases and rent. Your car leases, it depends if there's a list of requirements that go into it to determine whether or not it's a first, if it's a finance versus operating lease. So you got to look at your terms, if there's a dollar option buyout or different things like that. That would dictate whether or not it's considered a capital versus or a finance versus an operating lease. You're going to see that I'm going to struggle with that just because for my entire career we've called them capital leases and not finance. So that would be the first question. Obviously, like SBA loans, This is specific to leases. So your SBA loan would be under just your normal, so it wouldn't be affected. Your SBA loan would still show up as a liability on the books. We disclose future payments and stuff like that. So we're talking about the lease aspect. These spreadsheets, yes, we will provide them to you if you want to give them to your accountants and bookkeepers to help you to perform those calculations and stuff like that. We're fine with you providing these things. Just recognize that when we send it out, if somebody changes, writes over a formula and stuff like that, like we're providing these, we're not locking them down so that they're unchangeable and stuff like that. So if something gets written up, you need to be aware of that, but definitely provide it to those that need to get it to help you to get your books right. Ideally, at the end of the year, when you turn your books over to us to do the audit, you've already booked these entries. And so you should have those assets and liabilities on your books so that we're just comparing and checking to make sure that those numbers are correct. All right, so if you have any other questions related to leases, we are going to send those out. Once you get it, look over it. If you have any questions, my task or assignment to you for this week is to fill out the spreadsheet to make sure you've identified all of your leases, and then get working on filling out those sheets so that you can move forward with having those adjustments. So that's your assignment for this week in terms of getting prepared and stuff like that. Next week, we're going to go over a composite score review, help you to understand if you have any questions related to the composite score, and how some of these changes, like for example, the lease assets and liabilities, how it gets on and affects your composite score. Lastly, just please feel free to invite any school owners to these meetings, even if they're not clients of LSA. We want this to be an industry help, and we want it to be useful to whoever can. So we want to try and help everybody be more prepared for this audit season. Again, I'm grateful for everybody for taking your time. We're right at our 30-minute mark with our delay, so we'll close this up. But if you have any further questions, please do not hesitate to email any of us on the finance team here at Lightheart Sanders, Jared, Candy, Lily, or Phoebe, whoever's currently working on your audit and stuff like that. And we can help get you the information you need. Thank you so much, and we'll see you next week for a composite score review.